Hello, all of you wonderful people. Time to jump into some multiple choice questions on our conceptual framework section here. These are going to be a lot more conceptual based, a lot more qualitative questions rather than quantitative, rather than math. It says qualitative right here in the actual word unrelated. However, yeah, here we go. We're going to run through some characteristics. This question is asking, which of the following is a fundamental qualitative characteristic of financial reporting? Now, two ways to really go about this. For one, sure, let's understand what that means and why it's important. However, you can for sure just memorize it, and I highly, highly recommend to memorize it. And what do you memorize here? Well, we've got a wonderful chart here for your reference, which I'm sure you've seen in our lectures as well. This chart demonstrates what do we have? We have enhancing qualities, fundamental qualities, ingredients of those fundamental qualities. And what are all of these? Well, financial statements need to be relevant and faithfully represented. Those are the two main fundamental qualitative characteristics. And from these examples here, from the possibilities, well, I only see relevant. I mean, obviously, you couldn't have both faithful representation and relevance. It would have to just be one. So I'm going to go with letter B, relevance here for our final answer. Next up, we've got which of the following items is an accounting assumption? Now, these accounting assumptions, as you should be familiar with, remember, if not, please check out the lectures again as well. These are going to be essentially ideas that are inherent to our accounting process. Assumption meaning we don't need to think about them, we just assume them. They just exist. Now, in here, which of the following is an accounting assumption? Now, you might think revenue recognition is an accounting assumption because it's just something that's important. However, it's not an underlying assumption. Revenue recognition is more of a concept. It's a concept that can be changed, described differently. For example, if you've got cash basis versus accrual basis, those are different. It's not just assumed to be the same no matter what. Materiality as well, this is going to be more of an accounting constraint because this is going to constrain you based on how worthwhile is your time to present some piece of information properly. It might not be worth the company's time to dig into a $100 fraud if the company's a $100 billion company. So materiality right there, that's going to be a constraint. And lastly, historical cost. This is going to be more of a concept because what do you use historical cost for? Valuation. That's not going to be an underlying assumption. So for that, I'm going to cross off letters B, C, and D. Monetary unit assumption. Let's take a look there. We've got our chart here, which I was referencing. Take a look, get familiar. The monetary unit assumption is essentially saying that the financial statements are going to use some sort of basis, some sort of monetary unit, such as the US dollar, the Great British Pound, the Colombian Peso, any of those to present your financials. And that follows through no matter what. If we're dealing with cash basis, accrual basis, no matter what country, every financial statement needs to have a monetary unit, an underlying dollar amount that we use. Final answer, letter A. Last but not least, we've got another question. How are amendments incorporated into the FASB accounting standards codification? Let's talk about this for a second. We do not have anything to memorize here. We have to simply just understand it. Remember, no charts. Now, the FASB codification, you might be familiar with that, and if you're not, well, that is going to be where you find your authoritative literature questions or the research questions. That's where you dig through and you cite what paragraph, what chapter, what line. That is essentially the whole list of all the rules per FASB, the Financial Accounting Standards Board. Now, how do they make an amendment? Like we talk about amendments to the U.S. Constitution, we talk about amendments to the codification. That's just amendment is a change or an update to any sort of set of standards. And this one, do we issue an exposure draft? I'm just going to tell you no. Producing a discussion paper? No. Is it publishing a statement of a financial accounting standards? Not that either. It is going to be, last but not least, releasing an accounting standards update. Awesome. Hope you all enjoyed our first multiple choice question walkthrough on the conceptual framework and standard setting.